Simon, we've been talking sometime about the softness in the market. I guess it's been softening for the best part of 2 years now. Do we think it's kind of seeing a turn?
Yeah, I think I agree with you about the timeline. I think it probably has been starting to soften over a 2-year period. Sometimes quite difficult to read at first because the data kind of tends to lag the market reality. And I think a few of us in the market probably took a little bit of time to see the way the market was turning. I think we've probably got to a fairly bleak point in the sense that we got past the Bordeaux En Primeur, and it feels like that was an effort to re-engage, which worked only in a piecemeal sense, 1 or 2 chateaux, 2 or 3 chateaux, really gelling with people. But by and large, I think we're hitting that point now where we normally see a seasonal lull, and therefore I think you're going to see deals starting to appear. I think we're already seeing it, aren't we?
Yeah.
We're seeing deals come out of Bordeaux directly from negotiants. You need to fill in the bit that's missing from an En Primeur campaign that didn't ignite. And I think we're seeing UK stockholders try and lighten their load too. But what's interesting is right now we're starting to see some of those bids get net, and I think that's an interesting signal, because for any market to get to a point of recovery, you've got to get to a stage where people see the value, perceive the value, and not only perceive the value but choose to act.
And I guess the other thing we should, the other big fall was in 2011 to 2014, and that was significantly Bordeaux, an impact on Bordeaux. And obviously since then, one of the kind of the upsides of that, in a sense, was that other categories became more significant in the investment sphere, and that range of categories became broader. Some of those were obviously Champagne and Burgundy, which perhaps been more impacted in these last 2 years. Yeah,
I think so. In the sense, obviously, the market has spread in terms of the investment class of wines. It's much broader than it used to be. You know, when we started out in the industry, it was a very tight kind of diet. Yeah, Bordeaux, a little bit of Burgundy, maybe a little bit of top-end Champagne. Yeah. The market's far more dynamic now, far broader, so the categories have changed. And so I think, you're right, this isn't related specifically to Bordeaux. It's not a Bordeaux-led some it's across the market that we're witnessing this, and obviously related to the economic backdrop, interest rates, etc., some of the economic turmoil that we've seen in the world. But I think that what's kind of particularly interesting with regard to this particular correction, if you want to call it a correction, is that what we're seeing at the moment, the wines that are being pushed out there and the trades that are being done are on the wines that made the gains. So Champagne and Burgundy don't look brilliant at the moment in a general class, and it's worth stressing that we're talking in general terms, because it isn't a blanket reduction across the market. Yeah. But what we're seeing is the deals that are being offered, like the deals that are coming out of Bordeaux, 2019 vintage. Why 2019? Because 2019 made some money in the first place. The negotiant that's doing the deal reduces the price down to a level which is just ahead of the price that UK clients were paying on release. So they're not making a loss, they're not booking a loss. What they're giving away is the uplift that was felt in those stocks. And ditto with some of the champagnes that we're seeing come onto the market. Various vintages of Cristal trading hands at the moment for about £900 a 6-bottle case, maybe a little bit more. It's still ahead of the UK release prices at 800, 850. So it's not like it's a dramatic drop where people are cutting below cost. Yeah. It's actually where the stocks actually made the gains, but that's where people are looking first, because they don't want to book the losses. So it's kind of quite interesting, and that's why it's not a complete blanket reduction across the market. Yeah. But I think it's going to be interesting to see where this leads, because one of the problems that the fine wine market has, and again in a general sense, is you end up with young release prices dwarfing or being equal to historic great vintages. So a wine that's available in significant quantity being released onto the market ahead of a great vintage that's in short supply, that we've validated from tastings on numerous occasions, there's some kind of disparity there that the market's got to get to grips with. And while interest may fall on a vintage like 19, where does that leave 21? Where does that leave 20? Where does it leave vintages where there's still stock in circulation, that's still a little bit in limbo now? How are they going to find their route to market? If 23 was much cheaper and not a bad vintage by any stretch, how are these positioned? So in certain markets, the Bordeaux market, there is stock that's got to work through the system, and that's a kind of peculiarity of wine in a sense.
And then if you go back to the Burgundy and Champagne has significantly impacted. Obviously, there were dramatic rises for a 2-year period, and then there have been dramatic falls over a 2-year period. Do we think, and obviously there are very limited data points to get a real sense of what real prices are. Do we think we're getting closer to a point where we can start to recognise that in certain wines, or will it still just remain as volatile?
I think the volatility will gradually ease as people start to understand where the base price is. And you can look in the market, you can look on price comparison websites, you can see some merchants listing as if nothing ever happened and prices had no need to reduce, and they're still showing the top value. They don't want to end up pulling the market down, they don't want to end up showing a loss. I think they're a little bit oblivious to the market reality. But people have different views, that's what makes a market.
Yeah.
And I think if we're seeing trading occurring at a base price and people are picking that stock up, and this is people picking up stock that they might not be buying to put in their own inventory, one would assume that some of these sales are being brokered directly through to the end client. So that the confidence, if you like, starts with that end client. If merchants are carrying significant volumes of stock, unlike Atlas, we don't carry much at all, but some merchants carry weighted stock positions, they're not going to be adding into that stock position unless they feel incredibly confident. That confidence in itself comes from the consumer, the investor, the collector, at the end of the line. And if that's happening, the collectors say, hold on, I perceive value at that price point, then that's an interesting point for the market, and one would assume we're getting somewhere towards a baseline. And you look at the LiveX indices today, one of the best instruments that we have to judge from, and whether it's the 50 to 100 or whatever, we're looking at 13 to 15% down in the last year. And maybe we're just getting to that point where we're going to see that sort of solidify at that level, and it'll be interesting to see what happens from here. But some of the wines that are being discounted, some of the wines that are being pushed out into the market, you look at them and you think, well, these are some of the great vintages of recent times, and it's bizarre to see 08 Champagnes, 19 Bordeaux, 16 Bordeaux pulled down. But if the tide is lower, all ships are a little bit lower in the water. Yeah. And I think it's quite an interesting scenario that we're getting to right now. But how long it takes to come back, that's going to be an interesting point. I don't see huge price growth right now. In terms of a point to acquire astutely picked stocks, I think now's looking quite interesting, because I just can't believe that some of these go much lower.
Yeah, and I suppose the other thing is if we see that over a number of categories there's this stabilising prices, I guess what do we feel our message is currently to each of a current portfolio holder or a new investor?
Good question. I think if you've already got stock and you've got a good position in the market and say an extensive seller, your challenge is you might want to take advantage of some of the offers that you see around you, but you've got sufficient cash at play in fine wine as it stands. So your predicament is you want to trade, to churn, to be able to reinvest in new targets, to upgrade the potential, if you like, of your portfolio. The issue is obviously the value that you might redeem for those wines you want to trade is significantly lower than it was. However, I suppose that the simple analogy is it's a bit like the housing market. If you're buying and selling in the same market, you're selling your house but you're buying a house. If one value is suppressed, so is the other. And if you're getting what you want, then theoretically that would seem to make sense.
Yeah.
So I still think that if you're improving the quality of your holding and you're a pre-existing stockholder, it's a good opportunity to do that.
Yeah.
It might not be so easy to find those bids, but it's a broad market and it's quite diverse. If you're a new entrant to the market, well, there's probably comparatively little to concern you, in the sense, as long as you feel comfortable about the way in which fine wine moves forwards, and you don't believe that the market is broken, and you feel like it's going to return, the 7-year view is probably pretty interesting from this point in time, because it's a set of circumstances that have influenced the market and changed the market currently that are relatively unusual. We've got obviously the economic bits that we don't need to go into that affect all sort of luxury asset classes, luxury retail, however we want to term that kind of category. But then we've got certain bits, as mentioned, the stocks in Bordeaux, etc., the release pricing of Burgundy stepping ever higher every vintage. You've got these predicaments that are purely of the fine wine market. The fact that you've got all these young vintage stocks that are queuing up in the market and not finding their way through. You've got all of these bits that are peculiar to fine wine. So as long as you feel that you can selectively pick off bits and pieces and find value, a new entrant to the market, from my perspective, has comparatively little concern, because it would be relatively fair to assume this might very well be the lowest or towards the lowest point at which they could acquire stock in the next 10 years. Now, how outlandish a comment is that? Time will tell. But and it's possible you buy something and it drops a little lower next month, the month after. But that's not really the point. Trying to guess the bottom of the market, we all know, is a motor game. But getting in towards the bottom of the market, knowing that we're going to see a rise at some point, if you believe in the cyclical nature of these corrections, suggests it's not such a bad point for new entrants at all. But I understand the challenges with those that have got pre-existing portfolios.